We want to make sure that our clients their money is with us for safekeeping, and we take that very seriously. We moved $103 billion with zero fraud loss. And so I hope that that trend continues, but we're pretty methodical when it comes to doing things the right way, probably a pretty conservative approach. A lot of the technology that we employ as a community bank, you'd expect that like a money center bank, like a Wells Fargo or something like that. It's pretty fun that we have, a lot of those tools in our tool belt just because of CodaPay. So it really helps us drive a much better user experience, create efficiencies. And also we have the ability to get pretty custom down to the client level, because you might have a client that has 80 separate accounts. They might spend 3 hours trying to, make sure that everything balances out. With our technology, we can take that 3 hour process and get it down to 2 minutes.
Many community financial institutions have long legacies. Few surpass the century mark, and less still remain as closely held family businesses. Today, we're talking with Peter Stenehjem of First International Bank and Trust. Founded in 1910 by Peter's great-grandfather, First International has undergone large transformations, growing from $1 billion in assets in 2010 to over $5 billion today. Peter shares with us the factors behind their growth and their modernization efforts, which has led to the expansion and developing their own payment-related banking-as-a-service offering. Peter, thanks for being with us today.
Yeah, thanks for having me here. Looking forward to the session today.
So you recently took the position of CEO of the bank, and this is not just any normal job. You're the fourth generation leader of an institution that's now, 115 years old at this point. So many world events and business cycles and things like that, to have that level of legacy and just cementing to the community you're in. What's unique about that for you? Like, how are you thinking about your role, or maybe what are the considerations that maybe doesn't normally come into just taking another job, even as the leader of an organization?
Yeah, well, I'll first say, well, thanks for having me on. And again, I'm very, humbled and honored to carry on that family banking tradition. To your point, yeah, our bank was founded by my great grandfather in 1910, so 115 years ago. It started in a small town of Western North Dakota called Arnegard, North Dakota. Now, kind of home base is Watford City. Our bank has significantly grown since then. We're across North Dakota, South Dakota, Minnesota, as well as Arizona. And then we have a Fintech, which I'm sure we'll talk about. Yeah, as you said, it's a little different when you're talking from going from a third generation to fourth generation. It's a little bit more tied to kind of a family legacy. And I definitely take that with a huge bit of gratitude, a little unique, not necessarily unique being in the banking space that long. Probably what makes us unique is how tightly held we are. So our ownership group is just my mom and dad, myself, and then I have 3 other siblings. And so we're very tightly held. And then probably the size of our institution too makes this a little unique for how tightly held we are. We still pride ourselves on being a community bank. That being said, we're about 5.6 billion in total assets. And so we've seen some pretty significant growth over the years. Just to put some of that growth in perspective, it's taken us 100 years to get to the first $1 billion in total assets. We hit that in 2010. So we fast forward from 2010 till now, roughly 15 years. We grew up to that 5.6 type range. So we've seen some pretty significant growth. And as you can imagine, in that 115-year history, yeah, you're talking everything from recessions to pandemics to oil booms, busts, you kind of name it. Our history, we've seen quite a bit. That's for sure throughout our footprint.
So what do you attribute, or maybe what's the proximate cause of the rapid growth in the last 15 years? Was this taking advantage of the situation or the market, or was it something that you were trying to deliberately do as an organization?
I'd say it's probably a nice combo of both. I mean, we did get to take advantage of the strong economy that was happening within North Dakota. You had, I guess another round of an energy boom, especially with everything that was happening at the Bakken. You had, pretty strong commodity prices, oil prices, those kind of aspects. But also, I mean, we did a lot of organic growth. And so we expanded into a lot of new markets, both in North Dakota, but also Minnesota as well as South Dakota. We did do some acquisitions, not necessarily traditional banks. Our last bank acquisition was in 2008. But since then, we'd bought mortgage companies and other financial aspects. And so we did do a little bit of acquisition, but frankly, most was just organic growth. We saw the ability to hire some very talented team members. And when you have great team members, it seems like growth is a little bit of a byproduct.
And at some point, and I think it was earlier than this, you got into the kind of fintech space. Is that correct? Around the payment side of the house. What was the impetus for that? What kind of like led you as an organization? And if it was before your time, then what's the legacy or at least the lore, the myth around like why make that move?
Sure. I mean, as you can imagine, within banking over the years, we've seen a lot of evolution as to what clients are wanting. If you look back as to why we made the acquisition to what's now known as CodaPay, they're actually a client of ours, and so we had a little bit of a line of sight into it. We knew that the owners at the time wanted to have an exit. We felt that they were basically doing a banking function just better than most banks, and so we saw an opportunity there to acquire them, but also institute, fresh capital, do a software rewrite, and really grow what they do. And I can talk more about what CodaPay is. But yeah, we had a little line of sight into it. It probably took my brother, our chief strategy officer, Mike Toy, and I about a year to convince my dad that it was a good investment. And when I say that, he was used to buying traditional banks, getting, a building, some deposits and loans. When you're talking about buying into the fintech space, you're getting software and kind of a revenue stream. So it took a little longer convincing internally. Plus, we were pretty early, as far as the FDIC in regards to acquiring a fintech. A lot of banks have been partnering with fintechs, but I'll say going through the regulatory hurdles did take a little longer than anticipated. But at the end of the day, we're super excited about the capabilities that CodaPay has brought to us. And I'm happy to share more about what they do and kind of the wide swath that they have for a client base.
So beyond your relationship with the previous owners, presumably the founders, they were the founders of the organization.
Yep, correct. They're the founders.
Uh, Beyond that, why did it make sense for it to reside as a subsidiary or a service of the bank? Was it, overlap in market, things you saw as an opportunity? Like what was yeah, I hate the word synergy, right? Because I remember a school professor that says anytime anybody tries to sell a business case on synergy, just substitute the word magic. So, but what was the thing that said this will be more valuable if we own it?
So there's a couple things. One, I mean, they're in the movement of money. And if you think about what banks do that we're particularly good at, it is the movement of money, debit credits, ACHs, you name it, just the pushing and pulling of money. So we felt that that was an industry that was going to be around for a long time. Just sometimes it looks and feels a little differently. That being said, some of the largest expense items that they had as a standalone company were actually bank fees. And so with a bank acquiring them, and us having direct ties into the Federal Reserve and some of those aspects, we could eliminate an expense item and therefore create a little bit more of a competitive product. The other thing too is because we're, federally regulated, a lot of the competitors have to go out there and get money transmitter licenses, in every individual state, which is, pretty labor intensive and also expensive. And so that also being associated with the bank, one, it creates, stability. You have the strength and stability of a bank backing it. You know that you're getting, a regulated environment when it comes to bank. And so I think that just kind of also added on a layer of complexity, but also kind of a safety blanket or security for a lot of the clients that would be clients of CodaPay. Just having that, safety and stability of a bank just seemed to be a win-win for all parties.
Is there any overlap between the traditional banking side of the house and the CodaPay customer base? One leads to the other or the other way around, or are they kind of fundamentally two different businesses that have different go-to-markets?
No, absolutely. And over time, they've definitely become a lot closer. And so CodaPay, they're in the debit, credit, and ACH arena. They processed over 50 million transactions last year and moved $103 billion. So if you think about that, that's a lot of payments getting moved. And so because of that, obviously as a business bank, we have some treasury management capabilities that a lot of our clients are looking for. And because of the technology stack that CodaPay has and just their general process for, the regulatory environment, we're able to, kind of, I guess, recode or improve our mobile and online banking experiences for a lot of our clients. Therefore, a lot of the technology that we employ as a community bank, you'd expect at like a money center bank, like a Wells Fargo or something like that. It's pretty fun that we have, a lot of those tools in our tool belt just because of CodaPay. Plus, we have the ability to make changes kind of on a moment's notice, once we get through a testing environment, just because we have a full development team. And there's just not a lot of community banks out there that probably have a development team either. So it really helps us drive a much better user experience, create efficiencies, and also we have the ability to get pretty custom down to the client level, because you might have a client that has 80 separate accounts. They might spend 3 hours trying to, make sure that everything balances out. With our technology, we can take that 3 hour process and get it down to 2 minutes. And so, we've had very favorable feedback from a lot of our customers, especially the more complex ones that are just looking for some technology solutions to make their life a little easier.
So do you find that you're acquiring more customers that are kind of outside where your physical footprint in, which is again, it's the Dakotas, Minnesota, and in Arizona, correctly? Correct? That's where
Yeah, correct. And
okay.
and also, I mean, we're a relationship bank without a doubt. So we've been doing business in probably all 50 states as an institution, as a bank, just because we've followed relationships. CodaPay clients though are in all 50. We process a lot of payroll, and just because of some of the companies we work with, I mean, they're in all 50 states. And so yes, we are seeing opportunities, well beyond our geographic footprint. And a lot of those are probably more on the deposit side. So you're seeing opportunities for operating lines of credit, and sometimes that'll lead to some type of a CNI type portfolio, or maybe they have a building they want to acquire or add on to. So it is creating more opportunities, not from the traditional geographic footprint that we have as an institution, as a bank.
So payments is always a discussion item for like everybody. Like size institutions, much larger, much smaller. Um, one of the bigger, I guess, concerns or at least perceived risk is obviously around fraud, and that seems to have only gotten accelerated by the bigger adoption of real time payments. At the consumer level with offerings, Cash App and Venmo, and then the banking system Zelle. But then on more on the business side, between clearinghouses, real-time payment options, and then obviously FedNow, which they've been pushing into. How do you view that, or how what's the approach that you're taking either with your customers or with your technology, or like how you handle risk to really mitigate that, and or really kind of promote maybe additional capabilities that weren't there before?
Yeah, I mean, obviously, we want to make sure that our clients are their money is with us for safekeeping, and we take that very seriously. We have a very dynamic compliance process, or kind of the rules and regs that we follow. Knock on wood, we moved $103 billion with zero fraud loss, and so I hope that that trend continues. But we're pretty methodical when it comes to doing things the right way. Probably a pretty conservative approach, and sometimes there's customers that maybe doesn't align to, and we might lose the business, and we're okay with that. Ultimately, because it's our job for the safekeeping of money. And so if you're going to work with us, we want to do things the right way and hopefully stop any of those, fraud type aspects or mitigation type schemes. Seems that the criminals or those phishing agents, fraudsters, they're getting more and more complicated and complex. And so we do have, teams and processes in place to try to combat all of that. But as you can imagine, cybersecurity and just fraud in general is, top of mind for us all. And I mean, we have full blown departments and teams dedicated to that. But it seems like each day brings a new challenge, but also an opportunity to where if you do things right, people have a tendency to gravitate towards you as well.
So has there been a bigger demand for real-time capabilities, either from a consumer or business standpoint?
Yeah, absolutely. And we're actually, I think we're fully approved now or over the past, 60 days to offer those real-time payments, the RTPs. So we do have the capabilities and setup to do that. Obviously with Fed now, you're going to see that a lot, kind of cover across the whole banking footprint. But I think due to the developments of, your Venmos and anything else, you name it, it's real, it's here to stay. So we feel that for the right solution and the right clients, it makes a ton of sense. To your point, Zelle users too, that works for the consumer, but it seems to me that more businesses are wanting to do that depending on the application. So I think as, consumers and businesses continue to change, you have to be up with the market. And it seems like the market conditions are driving that. And we wanted to make sure that we were, staying up on that. And so, we spent a lot of time over the past year or 2 years, making sure we were ready to adopt that when it kind of came time to turn it live.
So beyond real time, what's kind of on the roadmap? Where do you think the future is for this, and how are you preparing to meet that?
No, I appreciate you asking. I think, what you're seeing right now, is some buzzwords with banking as a service. But obviously there's, some pretty heavy scrutiny for banking as a service right now in the industry, just with a lot of banks and fintechs getting in trouble. That being said, we've been studying a lot of the, cease and desist orders or regulatory issues that have taken place out in the market and tried to develop our own version of banking as a service. We call it banking as a service 2.0. We've actually just recently launched Cavenue at the recent Money 2020 event in Las Vegas. We did the announcement for Cavenue. Cavenue is our version of banking as a service. If you think about what CodaPay has been doing for the past 30 years, their history, that essentially has been a banking as a service type function. And so we just decided to, kind of improve it, put a few more parameters in place. But I do think you're going to continue to see banking as a service being very relevant. That being said, it seems that the pendulum has maybe swung back a little bit to, the banks or the power users to set up kind of the proper rules to follow versus, just kind of the wild, wild west of doing whatever you wanted. I think that's what got a lot of fintechs and banks in trouble. And so, for us kind of sitting on the sidelines for a little while, watching, what others did and frankly shouldn't have done, it's probably helped us adopt, hey, here's maybe the right process to do and launch it with some key partners early on. And yeah, we've been pretty happy with the reception so far. But again, it's been a very phased crawl, walk, run type of approach to, Cavenue or banking as a service 2.0.
And what's the scope of your offering here? Is this just payments, or does it go beyond that?
So thus far, it's been, primarily driven within payments. What we're seeing now is more demand, I guess, in the card platforms. So whether it's, prepaid cards or gift cards. So it's still a little bit kind of on the payments model, but maybe leaning towards more card applications too. We seem to be seeing a lot of demand or requests for right now.
And so this is essentially an embedded finance offering you've put out there through Cabinet. Is that correct?
Yeah, yeah, correct. I mean, it's kind of built within our CodaPay and our, housed within FIBT and CodaPay. We did go out and hire some industry experts and have spent about the past year and a half hiring some, pretty heavy hitters, whether it's in the payment space, banking as a service space, compliance and risk mitigation. We decided pretty early on, if we're going to invest in people, let's go out there and get some, top talented team members that can help us build this thing from the get go. I think a lot of problem that you're seeing is people are having to hire, based on need or necessity after the fact, after they got in trouble. We made a lot of those hires proactively as we were building it, just so we could build it the right way.
So do you see this as an offering that you're marketing, or you think primarily is for your existing customers, or are you looking for different segments to go after?
I think this will be mostly new segments. So, we have a pretty good client base within CodaPay and continuing to grow on a monthly basis. What we view for Cavenue or this banking as a service is that'll be, probably a whole new group to go after from a new client perspective.
Well, this has been really interesting, Peter. It's rare to really talk to. I mean, obviously, institutions of this length, they're becoming more and more rare that, have kind of kept this. Two, that, are able to kind of keep it together, being closely held like this, and have that, generational kind of efficacy, continue to continuity. But also that I don't know if this is maybe willingness or out of necessity, really kind of changing the business model of what you do as an institution. Did you, was there ever a time in here? I know you kind of told the story about how long it took to convince your father to kind of pull the trigger on an acquisition, but was there ever a point either, that you saw or as lore where you had this inflection point where it was like, maybe we're not going to make it here unless, we really find a way to do this different or take a different approach to the situation?
Yeah, I think we probably had a few of those inflection points throughout our history. If you think about previously, we probably felt that at the time we needed to be $1 billion in order to survive, all the regulation, all the technology needs. Now I'd probably say that number is probably closer to 5 billion, just based on all of the technology and regulations that banks are having to adhere to. I would say as an organization and mostly as a family too, we're pretty entrepreneurial by nature. And so besides CodaPay, we actually have a couple other facets to our institution that are a little bit unique. We do a lot of ESOP and 401k, what we classify as enterprise retirement solutions. I think we have 2 billion within that arena thus far. And that's been really fun just to continue to see kind of that succession planning, or those privately held businesses turn it over to their employees and kind of helping with that. Also, just because of what's happened in Western North Dakota with the most recent Bakken energy boom, we have a pretty dynamic capability within Mineral and Land Services. So we have a department called Mineral and Land Services where we have contract oil and gas attorneys, and we also have petroleum engineers on staff. And so we'll help you buy and sell minerals, evaluate your minerals, manage them, if you should participate, or, service damages, easements, you name it. We even help, I guess, big foundations or municipalities, the state, value their minerals, and also predict out what their mineral income will be so they can build budgets associated with it. And so if you think about kind of this traditional community bank space, and we're really good at loans and deposits, we do a lot of mortgage lending. We have a few other aspects to organizations, such as the ERS space of the ESOPs, mineral land services, let alone CodaPay and payments. And so I think just as an organization, I guess we maybe just leaned into that. We've recognized that, hey, we can't necessarily be all things to everybody, but we're going to be really good at a certain number of key areas. And we've just really tried to invest in those over the years.
Well, Peter, this is a very interesting and very unique story, and I appreciate you sharing it with us today. If anybody's interested in learning more about you or the bank, where can they go for more information?
Yeah, no, again, thanks for having me on. It's really fun to talk banking any chance I get. And so our website is www.fibt.com. You can find us on Facebook at, First International Bank. Obviously, I have a LinkedIn profile, Peter Stenehjem. Feel free to look me up, reach out. Again, it's always fun to talk banking, and we naturally have a kinship for all community bankers across the country, or any of those family businesses for sure.
And we'll put links to all of that in the show notes. Peter, thanks again for being with us.
No, it's great. It was great being on here. Really enjoyed it. And again, thanks for the opportunity.